Hello, and welcome back to another episode of Fun Friday. And we have a particularly special guest. It's not every single day that I get to talk to a friend, someone I've done business with, someone I've known basically my whole life, someone I played Little League with. His dad coached me. I coach his dad. And oh, yeah, by the way, if the name Taylor Oliver sounds familiar, it's because to Lone Star Capital, it is familiar because he's a friend of Rob and I's. But his brother, Bradley Oliver, Brad, is also the director of acquisitions at our firm, as we like to keep many things in-house from the Bay Area. So please welcome on to the show, to the listeners, Taylor Oliver, principal at Cervin Ventures. How are you today?
I'm great, Craig. Thanks for having me. It's
Yeah.
exciting to be here.
Yeah, well, it's very fun. So Taylor is a bit different of a guest because he's in the venture capital world. I think it'd be really fun to educate some people about maybe some misnomers and just really how the business actually works. And as we'll probably dive into today, the business is changing rapidly. When you factor what deals make sense in today's market, I'm sure, when you factor in AI, automation, and things of that nature. So we're going to dive into a bit of that, I'm sure. But I guess for the listeners, give us a background about yourself, maybe how you got into venture capital and how you became a principal at a cutting edge venture capital firm and fund today.
Yeah. So obviously grew up in the Bay Area, played Little League with you. Our first game, I think we lost like 25-1. It was a rude awakening into the into the real world
Right,
uh,
right.
of Little League, I guess if you call that the real world. And then, went to Sacred Heart. Once I knew I was going to Santa Barbara to play golf, I volunteer flag football coach for in the fall for junior and senior year. And I coached with a couple dads that happened to be VCs, but they're just, normal friends at the time. And then when, at school, once I realized I wanted to get into venture, I reached out to them to ask for an internship over the summer. And so I was lucky enough to get an internship with a guy named Gary Dillabo. And then from there, was introduced to a guy named Saeed Amidi, who's an avid golfer. And so we just hit it off like immediately. The guy plays tons of rounds, and we both shared a love for the game. And so I went and interned for Plug and Play on the supply chain team, and then came back to raise the first traditional supply chain fund. So it was an incredible experience. It's I graduated on like middle of June, and then middle of July, my first day was in Arkansas, um, at an incredible event with, a bunch of executives from companies in the Arkansas area, and just, started building a deck and raising a fund from the ground up and just figuring it out, just like trial by fire. And one of the things you're supposed to do there was meet as many VCs as possible, because in venture, it's a relationship networking game. So I tried to go to events as often as possible. Almost every day. That's, really why you live in the Bay Area, I'd say. And then, so had success raising a $25.5 million supply chain fund with the team there. Like really an amazing experience to build a deck, go through all the questions and due diligence processes that are needed from an LP's perspective. Um, Really learn the biggest thing there. You got to get in front of people in person. Like in person matters so much. And, you knew that obviously, but I think I was in Atlanta when COVID started. And like once COVID hit, it just became so much harder to do venture effectively, I'd say. And so yeah, that was the experience at Plug and Play. So raised the fund, started investing, and it was still a follow-on fund. So Plug and Play writes 50, 100K checks into about 200 companies a year. It's a great platform. There's about 500 corporates that are part of the program. And then went and helped raise a fund called Tenacity, raised a $60 million fund to lead and co-lead pre-seed and seed rounds. So we raised $60 million in about 3 months, which was an incredible experience. It was crazy busy. We also did 4 deals in that time. So we were running around like madmen. And then along the way, we made 19 investments, deployed most of the fund. I met this group called Cervin Ventures. And so Cervin, we had shared two co-investments. And so me and one of the GPs there we were board observers together, and we started spending more time together. And, we started talking about what it would look like to work together in the future. And I started spending time with the team, got to know the team. And it just turned out to be a great fit. Our visions and the way we saw the world aligned. And it's exciting to work with guys that have incredible track records and are, very open and keep their heads down and just want to grind and just are obsessed with winning. And winning is just like the byproduct of hard work and not, going for the vanity metrics, but actually like creating value along the way. And
That's
so that's the long-winded story for you. That was a long spiel and long ramble for you.
I love it. You make my life easy. And so many of my guests always say, "Oh yeah, well, sorry if that's long." It's like, no, please make it long because my goal here is to sit down to listen and to learn and to kind of absorb what you're saying. So you give me a lot of meat on the bone here to work off of. So let's kind of break down some things that I took note of while you were speaking there, which was in person. So in-person events and in-person meetings trump everything. So there's no substitute for that. I know Zoom is great, and we're obviously doing this conversation here through the Zoom medium, of course, which makes a lot of sense. As you know, it's hard to in the lockdown. Taylor and myself, as we're both traveling very constantly, we're racking up the frequent flyer miles, of course. But with that said, whether it be conferences, networking events, hosting events, going to events, it's been a great source for us to raise capital. And obviously, it's been a great way for you to raise capital, to meet people, and to find other people you may want to do business with at some point because it's an ever changing and fluid environment that you're in, without a doubt. And, similar to us, there's a lot of parallels to what we do and what you do. It's different, obviously structures and profiles, without a doubt, but there's a lot of similarities, which is a very fun conversation for us to talk about here as we both raise capital. So let's talk about the amount that you raised at Plug and Play at your first kind of start there. What was that like? And, from someone who just graduated from UCSB with no working experience, what was that process like? Because that is not an easy, world to step into when you factor all of the competition out there. And also, you and I look a little bit younger than the average person that's probably in our space. So I'm sure there was some finessing and professionalism yet to convey in order for people to trust you with their hard-earned dollars in a space that, like real estate, there's a real product, but venture capital, it's, a little bit of a guess and a bigger, I would say, bet because there's, not really a physical structure there, right? So can you kind of talk about that?
Yeah. So I would say, sorry, pause. Can you just read what? Yeah, I mean, the fundraising process was a grind. Raising a fund one is like the most entrepreneurial journey you can go on because you're going to get so many no's. You're looking for one or two believers to take the plunge alongside and buy into your vision. I mean, thankfully, there was a great track record in place and in a network, and so there was credibility within the supply chain space within Plug and Play. But then when you go out and you try and ask people for money, people will always support you and encourage you. But when you go and ask for dollars, it's a different world, right? So it's like, oh well, now is not the right time, and the fundraising journey just takes so long because you got to learn what messaging works. It's honestly just like a sales pitch for a startup, selling their product. You got to understand what messaging resonates, and what does not. And so, for us, there's a unique model within Plug and Play, and so showing that there's a track record and access to the best companies resonated. And then, going back to the in person. So like my first night on the job, three of the people at dinner became LPs. It took, 2 years to get them to commit, or I guess a year and a half to get them to commit. But it all started with in person on that first night and just building those relationships. And then, the people you want to get in front of their time is the most valuable, and they're the busiest people in the world for the most part. And so it's really hard to get their time. So when you get their time, you got to be ready and make an impact and be so prepared, be able to answer questions, any type of question that they might have. And if you don't have an answer, um, you know, it becomes challenging. You got to go back to the drawing board the next day and iterate because someone else is going to ask that question too.
That makes a lot of sense. And then how much was the total equity that you raised on that opportunity or for that fund, I
Uh,
should say?
$25.5 million fund.
So you are this 22-year-old guy who just graduated from UCSB, playing golf there, to a eight fi- or yeah, eight-figure capital raiser at the get-go. And how long did it take you to raise that fund in length?
Yeah, it took probably 18 months to raise.
Right.
Uh, and a big part of that is just because COVID hit in the middle of the raise. And so, that set us back, admittedly. It set everybody back. But as a first time fund, when people give you verbal commitments and are going into the docks, and then a once in a lifetime black swan event hits, they're gonna postpone, install, and delay, and their business models might get flipped upside down. They have to back out and conserve cash. So, um, crazy learning experience, that's for sure. Nothing's over until docs are signed and money is wired. That's for sure.
Yeah, well, I think I can appreciate that because we've done business together. I sold you your house in Arizona, but I can appreciate that until that commission check is in hand and that deal is closed. It ain't over until the fat lady is singing. So, as they say, so it's certainly a stressful process. Can you talk about who you raised from as well? Out of curiosity, is this from like universities, endowment funds, pension funds, high net worth individuals? What does it typically comprise of?
Yeah, so it was mainly high net worth individual family offices, and then the heads of families who said it would be easier for them to invest personally than through their large companies. So, fund ones, you have no chance of raising money from institutional endowments. It's good to start building the relations. They typically want to see 3 to 5 years of track record before they start to take you seriously. Most of them want to see you get to fund three or four or five even, before they decide to invest, if they do invest. But the family offices can be much more, you know, um, they'll take more risk because there's more upside. There's tends to be more upside in the emerging manager with a small fund because small funds can create much larger multiples. I mean, the beauty of venture is you can lose 1x your money, but you can make 10,000x your money on any investment that's made. And so they're believing that you're not only gonna be able to identify winners, but you're gonna be able to win those deals too. So I mean, you gotta find creative ways to get into these deals and show your value prop and like why a founder can't say no to you.
Right. And that actually is really fascinating. So there's so much to unpack on what you just said there that goes into what we think about as well, which is, first we're talking about raising deals and building relationships with people. We're speaking with a lot of people. We go to conferences or having these introductory calls where, guess what? We're not going to raise a penny for them probably within the next half decade because maybe we're too green for them or there's other opportunity cost situations that they're raising for right now or they've got a group that maybe has got another 5 to 10 years left and then they're going to kind of pivot out of the business, but we want to be there and kind of start the dialogue, start the relationship there so we can really appreciate where you come from. And this is why obviously we've stayed in contact together for so long and you really value relationships, as do we. And I think in a day and age now that's really more crucial than ever. So with that said, let's talk about sourcing and finding companies because, then you have the other kind of spectrum is not just do you have, the money to find deals, but then you got to find the deals. You have to identify if it's a winner. And then if a deal is hot, guess what? You're probably not the only one who recognizes it's hot. You've got to persuade them to, want to take your money, to want to work with you and your people, because naturally, if it's my understanding that when you do kind of place money into a deal, you're kind of their, advisors and on their board there. So can you kind of talk about holistically at a high level what the company sourcing process is like and kind of the nuances that many people wouldn't maybe think about or know about that is really, behind the curtains in the venture capital space?
Yeah, I think there's a lot of ways to go about it. So there's kind of three main buckets. I'd say there's content generation, a data-driven approach, and then just networking and like guerrilla warfare tactics, trying to make sure no stone goes unturned. So with content generation, you can try to become a thought leader in the space. And then founders will, if they like how you see the world and they see the world similarly, they'll send you a lot of inbounds. And then there's the guerrilla warfare tactic where you're going to every event. And I think everybody at the beginning has to start. You don't earn the right to not go to every event possible until you're 15 to 20 years into the business and you've had a few IPOs and you've crushed it. Um, and so I just think it's not linear, these deals, right? Like you can go 6 months without finding something, and you just got to trust that the work you're doing is going to pay off eventually, and that you're building this brand and building this deal flow engine. And so it's not linear. It involves a lot of luck, but luck is the byproduct of hard work in going to these events, making an impression. Like you have to make an impression and stay memorable at these events, and then stay in contact with all these people after the events. So it's one thing to just go to the events, but then you got to find ways to host events, to invite them to, and even if they don't come, just to stay top of mind and show you're out there hustling, and show the value you'll create for the founders. And then I think that's pretty. Those are the big areas.
That's awesome. And then what are you looking for when it pertains to, a company and a founder? Because that's a whole nother can of worms, right? And that's where, it becomes a measure of art and science, and really feeling comfortable with someone, because it's really not easy. And the business world now moves a mile a minute more than ever, right? So talk to me maybe about that process, getting comfortable with the founder, getting comfortable with a company, and things of that nature.
Yeah. So I would say on the founder side, like at the early stage, you have to buy into a founder's vision, and that their vision of where the world's going, and with a little bit of luck and a lot of hard work, like they can shoot the gap, and like create that future $10 billion plus public company, if their vision of the world succeeds at scale. And that's really hard because these founders are kind of visionaries, and so they're thinking about the world differently already, because they're taking the plunge to start a brand new company, with the most risk, instead of taking, presumably a high paying job somewhere else. They're like, no, I'm gonna start this company because I either can't build this product within my own company, or I just see an opportunity here in the market.
Or I'm just
Uh,
crazy enough to think I can execute it, right? And I'm just, either a little bit of a psychopath, a little bit of a narcissist, maybe a little bit of everything. But, if you're a founder of a company and you're doing that, you're a little bit crazy in the best way, I think. I think I'm a little bit crazy. You're obviously a little bit crazy to get into a performance-based job too, which is a beautiful thing. That's not a bad thing. It just inevitably kind of, if you're in the space like that we're in to a certain extent as an entrepreneur, or raising money, you're a little bit crazy because you're bold enough to think you can do it, in a very competitive space. Would you say that's slightly a fair comparison or analysis?
yeah, I think that's very fair. And I think also, like, you got to find, for me, it's hard to explain this in, like, I don't know, in a scientific way, but it's like when I have adrenaline pumping after a call, that's a huge indicator for me that I'm very excited about this company. I'm gonna like drop everything and go hunt them down, and like make the pitch to be their investor, and like dig in and start to do a bunch of diligence on the company. And so, you meet so many companies, but the founders that are different, immediately, like within the first 5 to 10 minutes, they just captivate you. And like, you need a founder that knows the space extremely well, but then you need a founder who can also close deals. That's a salesman, because he needs to recruit the best talent to join the company. He needs to be able to show up to, the big meeting to close his first 7-figure deal and hold the line, and not, crumble and take a 6-figure deal, or take a 100K deal instead of $1 million deal. That is very challenging. And then, founders, we're investing at the seed stage, and so founders are definitely gonna have to raise 2 or 3 more rounds to go all the way to go public. So they have to be able to pitch to investors, and like be able to have this presence and aura to them because they're going to have to go raise more money. You can have the best metrics possible, but in your next round, you're going to go have to pitch to another partnership at another fund that's larger, and you're going to have to get everyone's buying. Everyone's going to have to be excited and believe your vision. And so, like, it is so founder centric. Like, people is the most important part. You have to believe that these people are like can change the world, and they believe they can as well.
That's really fascinating, and it's so fun just to have this conversation because I don't think we talk all the time. We're talking about golf, we're talking about sports, Niners, this that, but we haven't really had a conversation of this, kind of with this kind of feeling regarding it and with this agenda. So I'm like literally sitting in the back of my chair, just absorbing everything you're saying and like truly like enjoying every second of this. So I just have to acknowledge that. So with that said, when you kind of feel that buzz and you get the adrenaline going, you feel the emotions kind of pumping. Is it really because the company's good, or is it because, oh my God, I just spoke to an absolute rock star and this person just had a completely different energy and aura than anyone else in the room, and they left a very, very big impact and impression on me? Would you say it's that? Like, how do you kind of distinguish the two?
Yeah, I don't think you can. So you need to feel that from the founder for sure. And then the market needs to be huge in the company they're building. You need to like what they're building too, or understand that what they're building is a huge market. So like for me, it's always if I get excited about one of the two sides, whether it's the product that's actually being built or the founder that's building it, whichever one's more exciting, then I need to dig into the other a lot more effectively. And so, digging in is I try and embed sales into all my diligence when I'm talking to companies. So, going back to these events, every event in venture is valuable because you can meet like the non-tech events, ironically, are the most valuable because you get to meet all these people that then act as a source of diligence for you. So if you're like, hey, I know, someone in finance at Apple, let me get their perspective, or, the head of supply chain at a Johnson and Johnson. Let me see if I can get 15 minutes with them and get their perspective of is this a hair on fire problem? Because you and I see the world from a perspective, Johnson and Johnson sees the world from the perspective, in the founder sees the world from their perspective. And so you need all three to align. So even if it seems like a great idea, you got to make sure there's budget and it's actually a hair on fire problem. And it's really hard to do that unless you can get in front of, unless you have a great network of executives around the country at different companies in different areas, whether it's HR, finance, supply chain, marketing. It doesn't matter. The larger that network is, the more value it is in the future. You just don't know when you're going to call on that person.
Yeah, and it kind of goes back to, making sure that, we all have a certain amount of bullets in our chamber, and these are favor bullets, right? And you got to make sure that you fire those bullets at the right time and pulling that right string. And also you are providing value to the other party to make sure that they actually want to reciprocate that. So it just truly goes back to the foundation, the cornerstone of any business is people and relationships. So everyone remember who you are cool to and who you talk to, because then we're having conversations like this where I'd be more than happy to refer you to anyone in my network and vice versa, where, I know from decades upon decades of data and experiences that you are a reputable person to connect with, and I would feel comfortable with, gatekeeping any and facilitating any relationship and pass off. So, doing well by people and making sure that you call in that favor appropriately and are doing that well is just another principle and theme of this show that we've talked about, but I'm really happy that's being reiterated here once more. So another thing that I found was interesting is just, getting comfortable with the founder and their background. I mean, how do you kind of audit that person? Obviously, you're probably doing some sort of a background check, right? And you got to get comfortable with them. But I mean, you don't want to have, a snake oil salesman or, a, legal nightmare on your hands, something like that. But, what does that process typically look like? And how long do you kind of audit people prior to, writing a check? Because the world's so fast moving right now that, it's probably hard to line everything up perfectly. And, you're never gonna get timing exactly how you'd like it to be, I imagine.
Pause. Can we reframe?
So how do you run your due diligence on a founder?
Yeah. So I think the first thing you do is you talk to the employees within the company. Like you ask employees how they are, and then there's no substitute for spending time with them in person. Like you want to spend as much time with them as in person as possible. So, you could, the beauty of ventures, if you're hot on a deal, you can drop everything and go fly out to meet the founder. And then you can spend as much time with them as possible and get a gauge. And then you can ask to meet with their employees, meet with some of their customers if they have some already, and then reference check. So you want to reference these founders, right? So you want to see if there's any content on them, if they host any events, where they went to school. And then you want to ask them for references and then get references from the references as well. And so that is what's interesting, is that anybody can find three people, to provide references. But if someone wants to, show you show you something, that they don't want to give up, but someone else will, that next round of three references, so 4 to 9, someone will give it to you. So like we had a deal maybe 2 years ago now, where we are on reference call number 9, and we were so excited about the deal. And then it was like, nope, you can't do this deal for X, Y, and Z reasons. And we couldn't do the deal. And thank goodness we didn't do it. But it's just, you got to get creative. Just like these founders have to get creative in the companies they're building, in the ways they're going to attract customers. We have to get creative in the way we diligence these founders as well at the beginning. And you talk to previous employers, you talk to people they worked with, and you just try and spend as much time with, going back to, there's no substitute for spending time with them in person.
That's really interesting. And I mean, it's funny because in real estate, sometimes the best deal you do is the one you don't do. And I think that's probably more apparent in the venture capital world, because you could still, have, bad fundamentals unwritten on a deal, and then, rates get cut, the market goes gangbusters, and you can still make a healthy return. But if things don't go well in your business, it's probably returning a big fat zero to that allocation on dollars, right? So that's, the downside is unlimited, but as you said, the upside can be, substantially more handsome in the venture space, which is something to keep in mind. So another thought that I had was, you mentioned this, which is, okay, you found the big fish, you found the guy. Now, how do you land the fish? So talk to me about how you distinguish yourselves, because with the, All In podcast, with all these big names, the Chamaths, the David Sachs, the J Cals, just to name drop a couple people that I'm sure you probably have ran in with, met with, and whatnot. But, they probably have got, since they're thought leaders, they get, probably a nice amount of deal flow coming in their way. And oh my gosh, I get to work with this person, right? So, and now kind of venture capital space has become very in vogue, which we'll talk about in a little bit. But how does, the team at Cervin Ventures, land big founders and get them comfortable to choose you guys? Because just like anything else, when things get hot, there's a lot of options. So kind of walk us through your competitive edge.
Yeah, I'd say it's definitely a relationship driven business. So you've got to build that trust layer with these founders first and foremost, and then two, you got to show them that you're going to hustle for them and not get in the way. So when a deal's hot, I mean, you got to find every way to get in front of them, every way to create value for them before you're even in business. So whether it's bringing them they're looking for a new engineer, or they're looking for a new head of sales or new AE in a certain territory, or they're looking for customers, like you gotta show them that you're gonna roll up your sleeves and you're gonna work for them. And then why Cervin wins, our three GPs all have incredible operating experience. So one of them founded a company called Akamai, which went public in about 2 years and is still about a $20 billion public company today. So that was one of the fastest IPOs ever. So, and then the other one bootstrapped 2 companies and sold them for 500 million. So he's just a purebred operator. Like he just, he asks founders why they want to take venture in the first place, but then he gets excited to roll up his sleeves with these companies too. And so with that lens, a lot of credibility with founders, and then our time too. Like you're going to get all your time from us at the seed series A stage, because that's what we do all day. That you can show up and you can create value for these guys and be value add. And then you just share your founder references too. Like once you invest in founders, you better do a good job for them because you're going to call on them for references in the hot deal to share their experiences with other founders that you've worked with.
Awesome. How frequently are you deploying equity and finding people? What does that look like? And, do you ever, get in a bidding war to land that? How are you guys really successful? You obviously throw on, the salesman hat and the pitch there, but, what does that look like for you guys?
Yeah, I think the bidding war days are, I'm not going to say they're over, but they're on pause right now. Um, so deal wise, there's no set rate, which is frustrating but also valuable. Like you could find two deals on the same day and you're going to do those, and then you could find nothing for the next 8 months. It just matters that every deal you do, you're just as excited as the last one, and like you're not lowering the bar just to deploy money faster, right? And so that's what's unique about ventures. You could do 6 deals in 4 months, and then you could do no deals in the next 6 months. And so as long as you're going through the right process, like you're gonna at the end of the day, your group of portfolio companies is gonna be amazing if you don't relent on that, perceived threshold for what it takes to make an investment. Because it takes 100 things to get to yes and one to get to no.
Right. So let's talk about then just for specifically what your roles are, because I know you kind of sit on the board of several companies, right? So can you kind of talk about, what, and there's no such thing seemingly as I'm kind of discovering, and I'm sure the audience can pick up. There's no normal day to day for what you do, which is probably some of the fun of the business, but what are your kind of roles, responsibilities, and I guess kind of your technical or just potential job description? You're on the boards, you're raising capital, you're out there, meeting companies, kind of walk us through the nuts and bolts.
Yeah, I think everybody has their own strengths, and so mine is definitely in assessing. Like I spent a lot of time assessing the sales team, with the founder and like walking through the sales process and getting the decks and trying to be, generate a bunch of leads for the founders. I don't like sitting on boards because then founders feel scared to come to you with their problems. Like it's better to be an observer because then you can be like you want to be there. The good news takes care of itself, but the bad news, like you want to be there and be on the front line. You want to be the firefighter that's like ready to be called to action. And if you're on the board, sometimes you're not called to action immediately because the founder's like a little scared to bring whatever situation forward. And so, at Seed, I don't think it's our job to take board seats all the time. At Series A, definitely. If it's a Series A deal, it's a different scenario. But at Seed, I think you just want to be the helping hand and sounding board because the founder doesn't have anybody to talk to about his problems, right? Like employees come to him about his problems, his family comes to him about his problems. He doesn't have anybody to go to about his problems or her problems, I should say. And so you want to be
Pay
that
them.
helping hand and that friend on the sideline that like they can come to and you can provide solutions for. And
I'm not
everybody's
surprised.
different.
I'm not surprised that you're the good cop. That is so in true to who you are. It's kind of how I am too. I'm the, warm, optimistic, everything's great, rainbows and sunshine person. And then if the whip needs to get cracked, well, we've got Rob Beardsley to give you the stern Russian. No, and to set you straight. I'm just here to, relay the information and provide some great energy and whatnot and make sure the capital's coming. And then he can kind of set everyone straight with terms and things of that nature. So we do kind of play the good cop, bad cop role there for sure. And, if I ever feel that I'm being, disrespected or if anyone there, I have no problem to tell them a little piece of my mind. But it's certainly nice to have, a couple different branches, if you will, to make sure that there is a line or two that we can kind of, both distinguish ourselves from, which
Yeah.
sounds like you are that person there.
Yeah, I'd say the other big thing is I tell founders when they're like, we'll get pre before we invest, we'll always talk about what it's going to take to raise the next round. Like, I think the biggest thing you got to do is set expectations on what success looks like with the use of funds. And I always tell them like before the next round, we're going to block off like 6 to 8 hours and we're going to go through your deck and your presentation and practice because nobody offers to spend the time to actually practice these pitch presentations and work on the deck with founders that often at the seed stage. And so, I mean, it's one of the favorite things we get to do. So oftentimes, a founder comes to you with 25 slides, 30 slides, because they want to put everything on the page. And in reality, you're trying to get them down to 8 to 10 slides, um, because you want all the attention to be on the founder, like not on the deck. You don't want them reading the words. And so it's like this. Every founder comes in with way too many slides because it's their baby. They want to get everything on the page, which makes sense. And then that's one of the biggest value adds is just helping them stay hyper focused on then what it takes from the venture side. Like that's fine for the sales deck, but for the Series A fundraise, when you're going to pitch a partnership, you got to have a short and sweet deck.
I love that because the way I look at it is if I can't convey to you what Lone Star Capital does in 5 minutes, I've already lost everyone's attention. This is not rocket science. We buy real estate deals, we value add them, we throw some unique tax abatement, accretive structures to it. This is where we are. This is what we do. What are your questions? Are we a good fit? Boom. Nothing more, nothing less. To convey a deal, 5 minutes tops. I will get all the pertinent facts and lead you to a point where you can ask me good questions to help you make an educated decision. It's as simple as that. So I really like that right there. Where keep it clean, keep it tight, keep it precise. Don't bore people with annoying stuff. People's attention spans are
Yeah.
short. If you lose their attention, they're not listening to anything you say. So move them down the line. Jordan Belfort, Straight Line Sales. If you haven't read that book, please do. It's very pivotal.
Yeah. And it's probably similar for you guys. Like if someone is going to want to get into the weeds, it means they're interested and understand. And then you can have all the slides on the back end ready in a separate presentation. But like for the first presentation, you got to assume they don't know the industry as deep as you, and you got to dumb it down,
Yeah. And
and
also
show the
rich
big picture.
Yeah, rich people, wealthy people, uber successful people, hardworking people are very busy. Provide the solution, be quick, be prompt, be prepared, be precise, and they will make a quick decision if you know what you're doing. So, boring people to death on long-winded responses is no good. So with that said, I am actually fascinated by the subject, and I certainly think the moat of this industry is definitely changing and just everything, which is tech, but also venture capital. So historically speaking, the tech hub of the world, not just of, America, but the world is the Silicon Valley, Bay Area, and frankly, Sand Hill Road, which you grew up right down the street from, of course, similar as did I, or I did, excuse me. My dad works on Sand Hill Road for Morgan Stanley, so he's been there for forever. So, it's funny. We grew up with this in our backyard, but, I think from a historical cultural perspective, it's very significant, especially in the space that you're in, right? But the consolidation of the venture capital world in the Bay Area is very interesting. And you mentioned being in person. So can you talk about the value of being in the Bay Area for your role and the importance there, and also just the brain trust that provides so many great, employees and also sparks so many great ideas?
Yeah. I just think it's essential to be in person when we even look at our best companies, performing companies in the portfolio. They're in person just because there's so much that you miss over Zoom, and you can't just yell across the office or come up with some great idea. An engineer can be like, "Oh, my friends actually can help you on the sales side with company X, Y, or Z." And so you miss that engagement in the culture and the excitement of coming into the office and working together within those best companies. But then for us too, like, venture is a full-on contact sport, and it's a team sport when done well. And so you need to have different thoughts and perspectives. And then these events, like, you get there are places like in Fort Mason, for example, there is a place where there are 200 engineers that go every Tuesday, Thursday night to just code and work on new ideas and meet with other engineers. Like, I don't know where else in the world you're going to find that after they finish their day job, they're going to go try and meet other engineers to try and find a new company to start. And so you have to just hear the diversity of thoughts and perspectives along the way, because you're every day the world's changing, and so you gotta be top of mind and kind of spot the trends before they happen or see where things could go long term. And so if you're sitting over Zoom, people aren't going to be as open. It's more awkward. You can't do more than one-on-one communication. Um, so yeah, I mean, it is the most valuable place to be if if in venture. Like there's just so many founders here. There's been so many. There's also the flywheel of the successful exits. So there's the executives that have exited that give back, start new companies, or angel invest in other companies, and then you want to meet those guys because you want to find those companies that they've angel invested in and get in front of before others as well. So it's just, we're in the information arbitrage game, and we just try and get unaccessible information faster than others. And there's no better ecosystem than San Francisco and Menlo Park and Palo Alto.
What we call that is legal insider trading. Okay. Legal insider trading. And that's precisely what we do, which is controlling what we can control and being really niche down in our particular submarkets that we're in. And we've got historical data because we have a $500 million portfolio of real estate in Texas, and we know what's going on. So play in the space where you get the biggest advantage and partner with people like this, which kind of segues me to the next topic, an idea that I have here, which is how in vogue venture capital has become. Seemingly everyone wants to be a angel investor. It's a really cool thing. Oh, I threw the seed money here and there, which is going to create, which happened in real estate recently, and just kind of when the market got hot with crypto, with venture capital, with real estate, and the ZERP market, which is a lot of hobbyists entering the space. And you do not want to be investing with a hobbyist, and also you probably don't want to take money if you're an investor, or sorry, a founder from a hobbyist, because they can't provide that much value other than, okay, well, Jay-Z or whatever, just to name a random name, invested with us. Well, that's cool for, to have a high headline like that and to tell your friends, but is that actually tangibly adding value? So can you kind of talk about, the hobbyists and how trendy it became and in vogue it came to invest in venture? And or is that still the case now? Can you walk through that at all if you have any takes on that?
Yeah, I just think you had the rise of social media, and so you got to see all the winners. And so, there's really not that many winners in the public markets today. There are 75 B2B enterprise tech companies trading for over $1 billion. Like 75.
That's
That is,
not a lot.
yeah. You would think there were thousands, the way social media portrays it. And so, what social media, I guess, doesn't capture are the founders that, want to go all the way instead of taking some chips off the table along the way, or instead of like focusing on their company and staying heads down, they're focused on vanity metrics like headcount, and the amount of money they can raise. Like, it's not about how much money you raise, it's about how much money you earn at the end. Like, go back to, my partner that bootstrapped his companies and sold them for 500 million. That's way better than selling for 2 billion, owning 20% of the company at scale. And so it's really about keeping your head down and just building. Like, you just got to build and believe in what you're building, and trust that, you're going to make it because you're putting in the hours and you're in the right space. So
Without a
I mean, I
doubt.
would say it's good to have more people investing in venture because it supports more ideas. Um, the you just, the earlier stage, like money that goes into venture at the early stage, like the most important thing is the time you can provide and the resources. So, the investors that you get in, you want them to be able to make intros. And so the best founders find ways to make their investors as active as possible and sign, like, non-binding, but some sort of contract where they're going to give them this much time and access to these people within their networks.
Without a doubt. Well, no, and I appreciate the candid and honestly open-minded nature where you're not just kind of, scoffing at the premise of them coming into the space. So to your point, it's great to have more people in there and create excitement. And that just goes to show truly how invested you are in the business. And a lot of people, like anything, as I said, are hobbyists and fly-by-night people. What we kind of call it is, the syndicator who goes to a real estate boot camp and now wants to syndicate a deal and gets super hot and, obsessed with it. And then might be leaving due to the interest rate environment changing and realizes how hard it is to raise money in a different environment when you're not fully dialed and buttoned up. So it's just more for us. And, it just goes to show what we're building is here to stay and we want to have start staying power. And obviously you guys have created that where you are. Kind of final topic I want to talk about. And thank you so much for sharing some time here in your busy day because you're so busy and have so much going on. So thank you so much. But can you just talk about how AI and automation has really obviously probably in your line of work changing more than anything else, because it seems to me like the future of companies is to be more lean and nimble. That's kind of like the Twitter model, right? Elon Musk bought Twitter, for a very large number, and then cut the staff like what, 80% of the staff, and turns out productivity is basically there. So when you run the numbers on the balance sheet there, you totally change the underwriting, right? So can you maybe just lend some insights in your opinion as to how AI and automation is changing the landscape of venture capital and the world as we know it today?
Yeah, I just think the rate of adoption and the ease of use to sign with tech companies now, like it's widely understood, it's not a nice to have, it's a have to have. Otherwise, you're going to get left behind and be considered a laggard. So there was some great stat that came out about the number of times a company mentioned their new or revamped AI focus improved their during a earnings report, improved their stock price because you know it's the future. You're going to have to automate different areas, especially because less people want to work. Like, there is a material labor shortage in the United States. And so if you can deal with less people and just deal with software, like that's a compelling solution at scale. And I also think there will be some billion-dollar companies that will exit with like 10 to 15 employees, which was unheard of before. So I think we're still in the top of the first inning in the whole AI wave. Like, obviously you hear all of these big glamorous companies, but then the rate of innovation is accelerated so quickly that defensible moats are just, it's really hard to maintain a defensible moat. And so you got to spend a lot of time, almost you got to be just fanatical about it. And so it's a hard question to answer, but I don't think we have seen the true ramifications yet, other than the amount of capital it's going to take to build $100 million revenue business is far less than it used to be.
Yeah, that's without a doubt. And we're seeing it here, Lone Star super lean. We want to do that. And I was having a conversation with a really good friend, Parker, the other day, and we were kind of laughing, but he's like, at some point, someone's going to have $1 billion company, and it's going to be one guy who's really smart, really sophisticated, and is going to create a unicorn, is going to have all these GPTs or whatever you want to call them. I'm not the most savvy here, but it'll be running like that. And he'll have some sort of a SaaS product that is hyper scalable and really lean, and it's just cranking cash, and he's just one guy doing it. So that's probably going to be in our lifetime, when we don't know, but it'll be interesting to see how that obviously changed the landscape. Taylor, thank you so much for coming on. I think we could go on for another 2 hours, but I want to leave part two, part three, and part four, and the rest to come for the future. Make you a constant contributor. If people want to learn more about your firm that you're at right now, learn more about investing with you, build a relationship, get some venture capital exposure into their personal portfolio, how can people find you, reach out to you, and invest with you?
Yeah, we're servinventures.com and emails taylor@cervin.com. We're B2B enterprise tech, seed series A investors, investing $1 to $5 million, pre-seed, seed, series A, leading, co-leading rounds. So, whether people on this show have friends starting companies or thinking about starting companies, would love those intros as well.
Awesome. Well, Taylor, thank you so much for being a friend, for stepping in and answering all my questions and piquing my curiosity as you always do. For all those listeners, thank you so much for being here, and we'll see you next week. Peace.